Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, January the 12th. The year is 2021. Let's talk trading. What to do after you make a mistake with Walmart. And just so you don't make a mistake, you must realize these videos are for educational purposes only, and your results may differ from mine and from Walmart's. Walmart, did you make a mistake today?
Oh yeah, I did. I don't know if you've got that graph that I sent you or not, but yeah, I went in, and what happened was, excuse me, I went and took a long, and when I took that long, what happened was is that it went up, and I was in profit for about 2 pips or so, and maybe even more than that. And what happened was it just stopped and didn't move, and I have a rule. If it stops, I get a one wall in place, and it just sits there for 20, 30 seconds. I get out. Just get out, take your 2 pips, and just be happy with it. Nope, I let that go. And it turned around and went against me. Next thing you know, I'm down 3 pips. Should have gotten out. Did I get out? Nope. What did I do? Stayed in the trade. Went down 7 pips. And I think I finally got out, with like minus 9 pips. Should have gotten out to 7 pips and waited past the 7 pips even. So it's just, foolish mistake, and that's sad, but that's just sometimes what we do. And do I have an excuse for it? No, I messed up. Not only did I mess up, but I messed up multiple times. But the thing is, but my trading plan, I say this every day that I'm on this video with you, is that my trading plan knows who I am. No other way to put it. It knows who I am, and because it knows who I am, I was able to get out of that trade and turn the day around, because I never exceeded what I was willing to lose for the day. So that was good. But the thing is, it would have been nice, to just have those. You think about it, took a 9-pip loss, had 2 pips. That's really an 11-pip loss when you really get down to it, because, I could have had +2 instead. I had -9 that I had to go make up, and so that's it's disheartening, and I read an article this morning where, someone was talking about when you make a mistake and what do? You get mad. You get angry for a little bit, and what you got to do is you got to just find it amusing that you've been doing this for so long, you know what you're supposed to do, and yet you still do it. And you got to get to the point where it's amusing, and the way it can become amusing is because my account was never ever endangered. It was also early enough in the day where I could go and make up the pips, and I did. So I made what I needed to make for the day, but. Man, it would have been a whole lot easier day if I didn't do that.
Yeah, for sure. And I just pulled up. I showed the traders. I pulled up your chart there for them. I showed them where you're lost, but you made it back. And right now we're in the upper rat zone here, the red rat zone. If you're a pound dollar trader, and you can see here I've got the M15 candles. And you could probably tell that right here, this was the high, and then we just had the price just shot right through it and put in a new high, so that of course the rat zone moved. But there were some opportunities within the old rat zone to take some shorts. And one of the things I just want to emphasize, because I know there's a few new traders out there, at least new to the rat zone. The rat zone is not a method. What it is, it's simply an area on the chart that says, at least for the pound dollar, based on the frequency distribution of the wick size, high minus the top of the candle, that usually price is going to, by the end of the day, price will close below this level. It will move somewhere around 20 pips off that high, at least 20 if not more. And so if you get into a trade within this zone, usually by the end of the day it will be out of the zone. But remember, the zone does move, it's dynamic, and so you have to take your pips when you can.
Yeah, and that's a very good point. Tierra, because that was one of my difficulties with trading the rat zone, and I used to get beat on it all the time, and it's like that crazy man saying you can make money in this, and I kept on getting beat on it, and what it was that I didn't look at it, and I knew it, but for some reason it just didn't stick in my brain that this is something that's dynamic and it moves, okay, and because it's dynamic and it moves, it means that okay, I get into the trade, I take the pips, okay, when I can. And when it looks like, hey, the gravy train is over, get out. And the second part of it is what you said already is it's not a method. So I still got to use my other methods for entry. It's just that what it's really doing for me is perhaps going and creating a little bit of a bias for me. So if I'm sitting there and I see a signal that says to go short, and I'm also in the rat zone, it's like, okay, not only do I have the signal to go short, but I'm in the rat zone, there's a good chance this thing is going to come down. And so for that reason, I'll go into that trade. And I may even give it a little bit more room to play, because of that. But then again, immediately get out. Now, I don't know which chart you have up there, but, for instance, I went short in the rat zone at 20. Okay, and if you notice, it went all the way down, almost to the 10 line. It didn't quite make it, and so what happened was, when it went and got to 14.8, I got out of the trade because you know what? That candle just looked too strong for me. It was like time to get out, and I'm glad I did because it was nice. I got basically 5 pips on the deal, so that's a good thing. But the thing is, I could have gone all the way back up and hit 20 again, and now I'm sitting in a situation where I was up potentially as much as 8 pips or so, and now I'm underwater. And it could have continued going up, but it chose to come back down again. So what did I do? I went short again, and this time I didn't go short at 20. I actually went short at 17, and I ran that all the way down. And what happened was at the close of the third red candle, I said, you know what, we ran into a problem here before. I'm out of here. I'm not going to wait. There's no reason to wait, because if I wait, there's a good chance it's going to run back up. And lo and behold, what did it do? It ran right back up. Could I have been wrong on that? Yeah, it could have continued going down and gone all the way back down to the 3,600, which is where this pair went and played all day. It played between 3,600, and 3,590 all day long. Could have done that. I didn't know what it was going to do, but I also knew it was on this video, and I needed to go, and I'm not going to be able to think as well. So it was sort of like, okay, I got 3 red bars, out of here, gone.
Yeah, and sometimes it really is that simple. But, it's just the main thing for traders to realize that the rat zone, you just don't jump in a trade here. You look for a rat reversal, possibly a holo cross, something, price action, lower lows, lower highs, something that tells you to get in the trade. For example, right here, you had this candle form. It didn't really go that much higher, turned around, went through the wick, through the close, turned red. That might be a reason to jump in the trade. So what you have to do, I was going to say, what you have to do is you have to have your triggers known ahead of time what you're going to do, so you don't airball a trade, or what we call manufacture a trade out of thin air. So right now we've got a 1 ball on the top, so we'll look to see if this breaks through, turns red, or if the next candle would turn red. And see right there, it came up, it turned red. You can go, went short, you can take some money off the table.
That's how you play this, And the thing is, sometimes I'll be honest with you, there's gonna be times when you get beat on it, but that's trading, right? That's gonna happen. But the thing is, more times than not, statistically, we know that you actually wind up in profit. So that's what you got to do, which means you got to take the trades and you got to look for the clear signals to do it. And the clear signals, again, is based on whatever your method of trading is. What's your methodology for getting into a trade? Do you get into a trade because of, like your buzzard reversal? That may be one way of doing it. It may be because it's a 3-bar reversal. It could be even a Walmart line, and it happens to be early enough in the hour to go and do it. So there's all types of reasons to get in. But the thing is, what I'm looking at that, and I said it already, but I'll say it again, what I'm looking at is that this rat zone up here, what it really is nothing more than setting up a bias for me. Now, the thing is, you got to be careful because, if it's too early in the day, typically on the pound dollar anyway, what the pound dollar loves to do is expand in one particular direction, then turn around and run all the way the other way and expand in that direction, and then turn around and come back towards the middle. That's what the pound does. If you look at the daily candles, generally speaking, there's nice wicks on both sides of those candles. Well, that's what we're playing is those wicks. We're trying to get the money on those wicks.
Yeah.
And that's,
I was going to say, yeah, and you reminded me, I hit one of my daily charts and it showed the pivot. If you remember yesterday, we missed the pivot. You can see today we took that pivot out.
Yeah. So it's not foolproof. Nothing is. There's nothing that says that you're going to win every single time. And the thing is, it's also something that's not going to tell you when to get in. It's another tool in the toolbox to give you a bias as to what you're going to do. People ask me all the time, what's your bias? And I said, well, what's price doing? That's my bias. Well, this is just something that adds to it. If price is going up, my bias is long. If my price is going down, my bias is short. Now, also, I'm not an intraday trader. I'm a day trader. I'm trading within the day. So for that reason, I don't have a bias that's long. Let's face it, right now, if you're looking at the pound dollar, your bias, if you're a trader who's trades long term, obviously your bias is probably, long, but at the same time, my bias today was long. It was also short, just depending on what price was doing and depending on where price was at. So, for instance, several hours ago, when we were all the way at the bottom where this day was, where I first started to trade, my bias was long. But right now, my bias is probably starting to look. You know what? We're so close right now to the top. We're probably looking at a bias more of a short, but that could change. I mean, this market could turn around into, in the next candle even go and say, you know what, we're seeing another daily high.
That's true. It sure could.
So we don't know what it's going to do, and that's the thing. That's my bias is what is price doing. But at the same time, I can also use this idea of a rat reversal, a rat trade rather. That's the wonderful thing about it is because we know what these pairs do a day in and day out. So it gives us a chance to go and say, okay, I got one more thing in my favor. It's sort of like earlier we hit a holo line, and and there's two ways to play it. You can play it that's going to expand that holo line, or you can play it that's going to go and come back down. Well, if you got a holo line, you're sitting in the rat zone. Now you got two things. Now what you got to do is you got to wait for some type of signal that tells you to go short. Bam, you go. And right now we're probably about 10 pips or so off of that holo line. But that
13.
That could be a nice play, And but like I said, who knows what it's really going to do? But that's what you got to do. Like right now, we were right at the edge of the rat zone. So we're probably going to come out of this, but or we may go back in. But do I have a signal to go short right now? Nope, I don't. Do I have a signal to go long? Not really yet. So what do I have to do? I got to sit on my hands and wait. Even though I'm in the rat zone, I've got no trade. There's nothing for me to do right now other than to watch price and see what these candles do.
That's exactly right. So, getting back to the main topic about, mistakes. So, what is it you did after you realized you made a mistake?
I went and took the next signal with the correct bias, and I went and took it, and I got real lucky because price never stopped for me, and so there was no reason to get out of the trade. So, I went up 2 pips, and, you would say, well, why didn't you get out 2 pips there? Well, the reason why is because price was still moving in my direction. It never turned on me. It was still moving in my direction, and so I just ran that for, I don't remember how many candles. I don't have that chart in front of me right now, but if I recall correctly, 4 or 5 candles, something like that, I let that thing run. But every single time, bam, 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 and what I did was I set a TP to go and make up what my loss was. So that was going to be my maximum I could have made on that trade. And you know. But at the same time, if it would have stopped and I was at like +5 on that trade and it stopped and didn't move, you know what I would have done? I would have punched it and said, hey, look at that, I made up half of my loss, and would have been happy.
Okay, well, you know what, fellow traders? The fastest 15 minutes in trading is up. So, you can recover from mistakes. Just remember, it's not what you trade, it's how you trade it. So, drain the banks. TheRumpledOne over and out.